This is The Mint live on ZTN Prime, your sneak peek into the world of business, finance and economies. I'm Ibem Nabunda. Let's get started. Coming up on The Mint, Delta Corporation, Zimbabwe's largest company by market capitalization, reported a 5% rise in their full-year revenue to $807 million for the year ended the 31st of March 2025. Lager beer anchored the group's performance, whose volumes grew 8% and contributed 43% to the group's revenue. Now, one of Zimbabwe's biggest financial services firm, ZB Financial Holdings, is stepping up its digital innovation efforts with the launch of a new mobile application, Smile Cash, a move the financial institution says is aimed at deepening financial inclusion in Zimbabwe. We take a look at a report. Listed clothing retailer Edgar's Limited opened a new Jet Stores branch in Shirogwi as it seeks to expand its branch network across the country. The addition brings the tally to 38 branches. The country's largest milk producer, Dairy Board Zimbabwe Limited's extra performance in the first quarter of 2025 shone brightly, with a 36% year-on-year surge underpinned by an 8% increase in raw milk intake to 9.95 million litres and 14% rise in sales volumes. Now, the Girls and Women Empowerment Network, an organization that advocates for the rights of girls and women, has constructed a study center in the Second District in a bid to empower the students with digital literacy skills. And Morocco welcomed 5.7 million tourists in the first 4 months of 2025. Several factors contributed to this surge, including enhanced air connectivity, strategic marketing efforts, and a diverse range of attractions. Of course, we take a look at these stories in detail here on The Mint. The Mint will be right back. Don't go anywhere. Welcome back to The Mint. We're broadcasting to you live from our ZTN studios in the capital, Harare. I'm Ibn Mabunda. Now, Delta Corporation, Zimbabwe's largest company by market cap, reported a 5% rise in their full-year revenue to $807 million for the year ended the 31st of March 2025. Delta faced a new government-imposed sugar tax, which saw the group paying $21 million in sugar taxes over the financial year. Lager beer anchored the group's performance, whose volumes grew 8% and contributed 43% to the group's revenue. Sorghum beer volumes dipped 7%, while volumes for sparkling beverages declined by 4%. Profit after tax grew 16% to $116 million in the 2025 financial year. Now, I spoke to Delta Chief Executive Matt Valela by the sidelines of their analyst briefing. Let's take a look at that conversation. We are by the sidelines of the analyst briefing and results presentation for Delta, a heavyweight on the Zimbabwe Stock Exchange. Now, I'm getting into a conversation with the Delta Chief Executive, Matt Valela. Matt, congratulations on a strong set of results.
Thank you very much, and thanks for coming to listen to our story.
Fantastic. An 8% growth in terms of your revenue to 807 million United States dollars. What were the key drivers of that particular growth?
Well, in the year under review, we have seen lager beer perform significantly better than we have seen in the past. I did say in the analyst presentation that in the last 4 years, lager beer has doubled in volume, and we have seen its weight on our results going up in terms of earnings and volume contribution. The sorghum beer business, which was everywhere in terms of the first half, also picked volume in the last half, driven largely by our better going to market strategies and liquids refinement as we were addressing the go-to-market strategies. The soft drinks business has grown following pack re-engineering that we delayed in the first half because of the sugar tax impacts, because sugar tax reduced the volume throughput because of its impact on price and competitiveness. So we ended up with grey imports of similar franchise brands, and we ended up with a highland competitive product. We have had to subsidize that to the consumer so that they stay in our franchise while we are engaging government. And we hope that as we do that, we will together come to a solution. Last year, if you remember, government upped sugar tax, then halved it for dilutables, and then didn't do anything about carbonated soft drinks. That can compromise jobs and livelihoods if not addressed, because we cannot subsidize that business forever. But that's what has happened there. The Maheu business, we relaunched Shumba Maheu in its various new liquids, and the market loves it, and we are seeing it running, and it's interesting. We watch what it will do in this coming year, but we like what it is doing, and we are very happy with the way it's going. The foreign subsidiaries are where the work is. The work remains with the foreign subsidiaries. In South Africa, we had challenges that I just outlined, but we are holding on volume. But as we switch between super and traditional African beer, we are actually margin enhancing and having a higher revenue base. So it is a program that we are deliberately managing so that we manage both tab and super. And we hope that as we win in that space, we can accelerate our earnings and accelerate our top line growth. In Zambia, the challenges have been outlined, and we saw a volume and value decline. Together, these two businesses cost us about $5 or $6 million a year if we don't manage to raise enough margin. But we think that we know how to move the dial, and we are going for broke this year.
Right. What strategies are you implementing to ensure that you get the most value out of Zambia as well as out of South Africa, perhaps over a 3-year horizon?
If you look at South Africa, 90 to 95% of the liquor outlets in South Africa were not stocking the sorghum beer category. So by lending in South Africa, we have really relaunched that category into formal alcohol. It was largely being consumed in the shabins. Now, most channels are now stocking sorghum beer, especially the retail outlets where other alcohol offerings are being consumed. And our strategy is to attack that, so you will have all the major retail outlets now coming on stream and stocking our product. That means that we are addressing the last mile to the consumer, and our go-to-market strategies will align. And we should see that delivering volume as we come to it. We obviously are doing a lot of things: skills development, investing behind plant, and so on, as we relaunch that product into South Africa. In Zambia, our major letdown was power, and we have taken steps to address that, albeit in an expensive fashion, because we've had to come up with generators that are very expensive to run versus power from the grid. But we now have standby generators. The last year we lost almost 6 months without supplying product, compromising our consumer. We hope that this year, if nothing else goes wrong, we will be able to be present and to drive towards that break-even point. The interesting thing is that the volumes halved in the last half versus where we were when we were almost break-even. So we have to re-trigger that, because consumers obviously move on to something else. And Zambia is a particularly finicky market, not too quality sensitive in some areas, but very margin sensitive, very price sensitive.
Right, let's move on to some of the segments with regards to the lager business, where it is that there has been notable growth achieved over the past year in question. What were the key elements that you put in to ensure that there was sustained growth?
You will remember that about 2 years ago we invested in new capacity. We commissioned a new bottling line. We invested in containers to make sure that we can supply brand and pack into the marketplace. We engaged value chain partners to develop consumption areas, and that has seen the volume responding. Right now, returnable glass is about 95% of the offerings that we are giving to the marketplace. There is opportunity now to drive up the premium offerings so that we can match any other premium offering that comes into this territory. And we are dialing that up. Glass is coming in. and we stand ready to capture that opportunity.
Right. There remains concerns over, of course, the sparkling beverages owing to the issues of the taxes, and now that also there is that L aspect of strips. How are you managing under the circumstances to ensure the sustainability of these two aspects of the business?
So the soft drinks business and Schweppes, while they compete for share of the throat, are complementary.
Right.
If you want to keep the consumer in your franchise, whether they want dilutables or they want carbonated soft drinks, you need to own both. So it's a completion of a story that was essentially our birthright to go with this as a total package. We think that the matters of sugar tax are matters that we will address together with government, because I don't think that any of us want to compromise business viability and compromise enterprise and ultimately livelihoods. So we think we'll address that. We are ready. We remember we invested again in the last 2 years in a new PET line. We have refurbished our bottling lines. We are bringing in all the concentrates that are required for that. We now have invested in Schweppes to get into 69%. It means we now control that business. We can put the weight of our expertise behind it. And you will know that we were looking absent in the water category. We were looking rather underrepresented in the dilutables and the cordials space. We hope that we can dial up that volume and achieve profitability.
Right, you have 10,000 hectares that are under contract farming. How are these feeding into the model, and how are you addressing the issues of the prices, which has been a bit of a contentious one, of course, broadly where the market is concerned?
So 10,000 hectares is only under maize contract. We have another 6,000 or 7,000 hectares that we do on barley so that we supply lager beer. We have another so many hectares that we do with the 12,000 families that we subcontract under sorghum, all feeding cereals into our systems because we are essentially a cereal producer. Now, 10,000 maize hectares, 6,000 in Zimbabwe, 4,000 in Zambia. All this is being done to assure ourselves that should there be a food shortage or an undersupply of maize, we remain available and competitive. Should there be control on these products because they are short, we at least have 40 or 50% of our requirements. Certainly 6,000 hectares in Zimbabwe will achieve 40-50% maize self-sufficiency. Then we'll go to market for the other 50 or import should there be insufficient in Zimbabwe. Similarly in Zambia, last year we saw maize moving from just over $200 per ton to almost $500 because there was a shortage in Zambia. And it becomes difficult to lay your hands on maize for beverage production when there's food insufficiency. That's why we are contracting. First, to grow with the communities. Secondly, to protect our value chains. And thirdly, for affordability.
Right. The AFTIS numbers were released today, and of course, you made some reference to them. May you just highlight in a nutshell the performance of that associate and perhaps the future trajectory of that particular business?
You will remember that in AFTIS we are partners with Distel. The brands that are being sold there, just over half of them belong to Distel. So we are just over 50% shareholder, and Distel is just over 30%. We are excited by the growth because they have grown across categories, whether it's in wines, spirits, or ciders. All of them have grown. But more importantly, their innovation in new products, in new spirit styles, premixes, and so on, that are in that category, that they have launched, Sky Night, and so on. Those are having a good market uptake. So they are being driven by both pack and liquid innovations as they grow. And they have technical support from Distel where required. They have our support from Delta where required for things that we may know better because of our specialization.
Right. What's your one-year outlook as we wrap up?
Well, we think that the gold price is a positive in our region. We think that copper demand is a positive in our region. We think a better agricultural outturn is a positive in our region. So disposable incomes should be available. As long as we do the right things as the three countries, we think that our people will be better off and therefore be more liquid to consume our products. And we will be there to offer that liquid down the throat if the consumer can pay for it.
Matt, thank you for speaking to the Mint, and good luck with the ensuing financial season.
Thank you very much, and good luck to you.
Fantastic.
We look forward to talking to you some more.
Fantastic.
Thank you.
Much appreciated. Of course, Matt Falela, the Group Chief Executive for Delta, speaking to us by the sidelines of the Delta Analyst Briefing and Results presentation. Thank you, and don't go anywhere.
Harare. Tune into the beat.
Capitalk 100.4 FM, your source for news, business, sports, fashion, and more.
Experience the pulse of Harare's culture and lifestyle.
Capitalk 100.4 FM, Harare's top radio station.
Join the conversation with Zimbabwe's top personalities.
Subscribe now for fresh and infotainment content daily.
Capital 100.4 FM, Harare's heartbeat.
Welcome back to the Mint as we come to you live from Zimbabwe's capital, Harare. I'm Eben Mabunda. Now, one of Zimbabwe's biggest financial services firms, ZB Financial Holdings, is stepping up its digital innovation efforts with the launch of a new mobile application, Smile Cash, a move the financial institution says is aimed at deepening financial inclusion in Zimbabwe. We get more details from our ZTN Prime, Melissa Chatikobo.
The world is going digital at lightning speed. From how we shop and communicate to how we bank and do business, technology is reshaping everyday life. In this era of smartphones, artificial intelligence, and cashless economies, staying connected isn't just a convenience, it's a necessity. As global economies embrace innovation, institutions such as ZB Financial Holdings is embracing such in their application, Smile Cash.
We've studied the requirements of the market in terms of the pain points that members of the public are experiencing when it comes to banking. First and foremost, banking is not very accessible. Secondly, there are so many queues in the bank. If you go during month end, you'll see quite a lot of queues around that. Thirdly, sometimes it takes you to take a trip to go and do a transaction.
In line with Zimbabwe's national financial inclusion strategy, Smile Cash offers a digital wallet that is both accessible and secure. It empowers informal traders, rural dwellers, and the youth, groups often left behind by traditional banking systems.
Also try to do is to make sure that our services are accessible on your smartphone and on your basic phone, that is either via the app or via USSD. This ensures that even anyone in the rural areas without access to maybe data, for instance, is able to continue or to access financial services.
Smile Cash comes to a market that has a number of players already fighting to be the main mobile wallet for Zimbabweans. But the bank is confident that it will garner a significant market share.
At the same time, we're also going to make sure that we're interconnected with multiple agents throughout the world so that more money can actually come into the country. Right now, the gateway of FDI in terms of remittances is still quite small. We need to get to play that game.
As digital disruption continues to shape the global economy, ZB Bank's Smile Cash could be Zimbabwe's answer to inclusive growth. One transaction at a time.
So if you go to the rural areas, you've got the stores, the shops, the storos as they call them, and we're also encouraging those to come in and become our agents so that they can become a facility for our customers to be able to either cash in or cash out their funds through the wallet.
Digital finance is now a pillar of global economic growth. When you enable people to transact, save, or borrow using just a mobile phone, one may say you're unlocking productivity and enabling informal economies to formalize. Reporting for ZTM Prime, I'm Melissa Chitkobo in Harare.
Melissa, thank you for giving us that report. Now, listed clothing retailer Edgar's Limited opened a new Jet Stores branch in Shurugwi as it seeks to expand its branch network across the country. The addition brings the tally to 38 branches. Edgar's has been on a bullish trajectory and has expanded its retail footprint with the launch of new express stores in Rusape and Harare in high-traffic locations. Edgar's regional operations manager Mundli Hlongwani says the new branch opening is in response to a growing market in the Shurugwi area.
So look, I think from a business perspective, obviously we are a fashion house. Jet is known for good quality product, and we are simply just saying we want to bring it to the customers' doorstep. So Shurugwi presented an opportunity for us, which we are happy to have also just decided to come to. So look, I can give you a number and say, look, we've got 38 Jet Stores countrywide. So obviously when we looked at Shurugwi and the community, it presented the market that we need. They've got trendy individuals, people that also then appreciate our brand. Some of them are actually going to Gweru to come and shop. So why not buy in Shurugwi? So that's why we've come here.
Right. Now, the largest milk processor, Dairy Board Zimbabwe Limited, export performance in the first quarter of 2025 shone brightly with a 36% year-on-year surge underpinned by an 8% increase in raw milk intake to 9.95 million litres and a 14% rise in sales volumes. Now, despite the government's 30% surrender requirement for exporters, limiting growth to a potential 45% to 50%, this robust export performance highlights Dairy Board's ability to capitalize on global demand for dairy products. The company's US dollar sales share climbed from 85% in the first quarter of 2024 to 95% in the first quarter of 2025, driven by Zimbabwe's tight monetary policy, which constrained ZiG liquidity at 35% interest rates, pushing consumers and businesses toward US dollar transactions. Now, we spoke to financial analyst Tapiwa Nashe Kusereka, and this is what he had to say.
Well, milk production in Zimbabwe is on a right trajectory as we are trying to attain 150 million liters in 2025 as compared to 2024 where we managed to produce something like 114 million liters, and as a nation we require something like 131 million liters. But with the right strategy which was implemented by the government of Zimbabwe and the strategic initiatives to support milk production in Zimbabwe, I am quite sure that we are going to surpass those numbers. And if we look on trading updates which were circulated by Dairy Board, we noticed that the Dairy Board managed to increase milk production by 8%, which is quite a significant contribution in terms of milk production in Zimbabwe. And I believe that contribution from those companies in terms of milk production will help us to surpass the target we have of 150 million liters, and is unsurprising that we are going to experience or to testify a boom.
And now, of course, the voice of Tapiwa Nashe Kusereka, who spoke to ZTN Prime earlier on, of course, the performance of Dairy Board in the first quarter of the year. Now, still to come on The Mint, we look at women and girls empowerment in Zimbabwe and beyond. And also, we take a look at the 6 million visitors that went into Morocco in the first 4 months of the year. The Mint to be right back. Don't go anywhere.
learning has gone up and away on the ZTN Prime Kids Block as we blast off into the world of science, language, mathematics, and many more.
There's a living dinosaur in the woods!
Get the crew together, let's have an after-school homework party.
Your friends would think so too. Definitely. It would be nice if everyone could enjoy them. Aliens.
Unicorns. I wonder what the unicorns would wear.
Remember, learning is fun when you're tuned into ZTN Prime.
Boy Robo to the rescue!
The ZTN Prime Kids Block. Catch it Monday to Friday from 3 to 5 p.m. on DSTV channel 294. Get the picture?
Welcome back to the Mint. I'm Ibn Mabunda. Now, the Girls and Women Empowerment Network, an organization that advocates for the rights of girls and women, has constructed a study center in the Seke district in a bid to empower the students with digital literacy skills. Our correspondent Mashudu Mambo gives us the details.
In the community of Seke, a remarkable transformation is underway thanks to the Girls and Women Empowerment Network. The organization has been working tirelessly to empower girls and women, providing them with the skills and support they need to succeed. The Study Center is one of the initiatives launched by the Girls and Women Empowerment Network to support students in Seke. With digital literacy skills and educational resources, young women are now able to pursue their dreams and achieve their goals. The organization has a number of projects set to empower young women with skills to sustain themselves. These projects include vocational training, mentorship programs, and educational workshops.
And we believe, following the WHO guidelines, following the Zimbabwe's agenda and policies around education, we believe this project could contribute somehow to eliminating or ending child sexual exploitation disguised as child marriages, because we create a platform where girls and boys can come and learn about their rights, about their opportunities.
By providing them with the skills and resources they need, the organization is helping to create a brighter future for the community.
So the center will be operating on Tuesdays, Thursdays, and Fridays, and some weekends, where learners will be coming from the different schools with their teachers, with the authority of the Ministry of Education and the headmaster on agreed timeline, so they can spend the 2 hours in the computer lab and another 2 hours in the library.
The Girls and Women Empowerment Network has made a significant impact in the lives of people in Seke. This has been through a number of initiatives like a study center, women empowerment projects, and educational workshops, which are aimed at supporting women and ending child marriages. Reporting for ZTN Prime, I am Mashudu Mambo in Seke.
Thank you, Mashudu, for giving us that report. And of course, that's a wrap on the Mint today, as well as for the week. Do follow us on social media handles at Zim Papers TV Network, as well as at ZTN Prime. Your views and your thoughts are important to us. Remember to catch us every weekday at 2 p.m. Central African Time for the juiciest business stories in Zimbabwe, on the continent, as well as beyond. I'm Ibn Mabunda, the money man. Let them do what they do. When we do what we do, we mean business. Thank you for watching and have a great weekend.